Okay, folks, welcome back. New week. So we have an economic calendar here in front of us for GBP, Euro dollar, and the US dollar. Pretty short list, but heavy hitters in this one now. We had an absence of really any significant price data today for the economic calendar. And tomorrow, 10 a.m., we have ISM non-manufacturing PMI for the dollar. A medium impact for London for GBP. For PMI. And then on Wednesday, we have Fed Chair Powell speaking at 7 p.m. And then Thursday, this is the heavy hitter, we have medium impact economic forecast for Euro dollar, and then cable. Inflation report, official bank rate votes, monetary policy summary, and the official bank rate at 7 a.m. for Thursday. And then we have two more speakers for that day, medium impact relative to the dollar. The conditions are very similar, unfortunately. It's very similar to what we had last week. So we're going to be playing it by ear. It looks as if we may have some opportunity to trade the New York session on Tuesday and Wednesday. But then you simply want to be on the sidelines and just watching the effects of the New York event for GBP. We'll be looking for some imbalance that's created, hopefully, from all this. If there is, then I'll obviously send you something by way of Twitter, a link taking you to the forum, so you guys can get a quick insight about what I may be expecting to see. If there is something that permits me time on Wednesday evening to outline a scenario that I'd like to see for this event, then I'll do that as well. But we're just going to play it by ear until then. So moving over to a point of interest for crypto, I was reading this. This is the only real thing I like to follow. It's Zero Hedge. I don't subscribe to anything by way of like social media, Twitter, anything like that. But Zero Hedge is one of my favorites. I get a lot of information from them. This is pretty alarming, actually. If you're a crypto trader, one of the crypto exchanges, there's an owner. He had complications from Crohn's disease and died, and it's locked up like $190 million. He was the only holder of the password, and it's pretty much bad news. I hope anybody in here hasn't been affected by this. But if you need one more reason to get out of crypto, that's a pretty good one for me. It's just, hey, if you're in here and you're trading crypto and you made money, God bless you. But to me, it's just so many things. Trading itself and learning how to do it is complicated enough. And then you got to worry about hacking it, or someone hacking it rather, or you lose your password. you're screwed. So bottom line is this, that's not a market for me. I'm not going to be considering it at any time. So just wanted to throw that out there just for one more issue. So let's move on over to the charts. All right, so we're looking at the dollar index. This is a daily chart. So a couple points of interest right off the bat. We have buy-side liquidity in the form of these equal highs up here. If you drop this down a little bit more, you'll see that weekly inefficiency. It's only sell-side delivery that was offered. If you look on your weekly chart, I'll leave that to you. We've talked about this in previous market reviews. We just simply didn't see any movement on the dollar to get up to there. But that would still be a long-term draw on liquidity for the long-term bulls. Presently, the largest liquidity pool for sell side is below this low and this low. They're basically relatively the same low, and we're looking for like 94.50 or thereabouts. The current market structure right now, I really don't like the fact that we dipped this far generally, but I'm going to see if we have any evidence to support the fact that we maybe have used a reclaimed order block. So in other words, we saw these down close candles here. We traded down into it here, and we're seeing it again in here. I'll show you what this is when we get into the lower time frames. But for me, it would need to really strongly move above this swing high. Okay, and if it does that, that would indicate to me that we would probably make a run for the weekly inefficiency. Now, it can't just poke its head above it and then reject. It's got to trade above it and then come back into it some capacity. It can't just go through it and I'm going to be breaking into a bullish stance for dollar. I want to see it trade through it and then come back down into it. Once it trades back down into it, then I would consider it. But it would still have to give me a scenario technically to support the idea. So I don't want to just see it trade through there. I don't see it as a turtle soup sell. In other words, I don't see it running through this high if it goes up that high and then sell off. I don't see that. I think that if we trade from here and keep going higher, we have a very large liquidity pool resting right in here. There's a lot of long-term hedge funds that are trying to sell short the dollar, and their liquidity would be based right in here above these equal highs. So if we get a central bank run on the dollar, that's where we would see it run to, the 98 big figures thereabouts. So let's go into a smaller time frame. All right, so here's the order block that has been shown on the daily. You didn't see really the reference point, but that's the low we saw on the daily. This order block in here, we have closed in this inefficiency. So we have buy side imbalance, sell side inefficiency filled in. Order block, rallied away. Nice little optimal trade entry in there. And then rallied away one more time. Breaker, that's right in here. This low to this high, this low, runs up, returns back to this high right in here, rallies again. This in itself is a breaker because we have a low, a lower low, find the high in the middle. If we trade back down to it, it'll be a buy. That's what we have here. Prices rally through, and now we have again another, I hate to say it, but it's an example of trapped order flow. So we have a breaker, high, low, higher high that runs the stops here. It breaks this low right there. Didn't quite get to it here. I'd like to see what we do once we trade up to it in here. So we could hit that and then it could sell off. I'll be watching for that scenario. That may happen. Or we'd like to see it trade through this and go through this smaller scale breaker. This is a bearish breaker as well. And once it broke through this low on this movement, we have a small little inefficiency right there. It ends at this candle's high on the low end, 95.72, and it trades up to the 95.80 level. So there's a small inefficiency in there for that. For me to be bullish and have a strong measure of confidence that it could be long dollar, short foreign currency, it would need to trade through this level here on the upside. And I'm not convinced that it's going to do that. To me, this looks too one-sided for right now. So we might see it trade back down if it hits this level here. It may trade back softer, maybe run some stops in here, or maybe come back to an order block. I don't know. I don't know how to forecast it the way it is right now. There's really nothing to go on except for we have a brick wall ahead of us. Okay, that's really the bottom line. We have a brick wall ahead of us on the upside, but even though I like the upside for that weekly inefficiency, I've been liking it for months. It just ain't giving it to me yet. So we have to find out if it has a willingness to get above this level in here. And it may require the news that's out on Thursday for the British pound. It may require that. So we'll see. Moving on over to the euro dollar, you can see we're pretty much in a very large consolidation. This is, again, the daily chart. If we zoom out a little bit, We still have this inefficiency down here. I mentioned basically weeks, almost a couple months ago, relative to the weekly chart. So buy side imbalance, sell side inefficiency. So if we do start to see it sell off, we could see this as a long-term draw. Again, but the scenario has to be seen in the dollar as I outlined a few moments ago for this to even be considered. Now, there's really technically nothing fundamentally strong going on for euro dollar, and it's really nothing going on for the dollar except for just constant drama and reality TV type scenarios unfolding in the White House. So we have a lot of what ifs, and unfortunately, I know some of you are probably hoping that I'd have some kind of crystal ball to see through all this chaff. I don't. So these are those instances where we just have to grind through it, and then once the horizon becomes clear to us, then we can start working with very easy, quick movements and price action, and there it is. What brings that, by the way? What would cause some clarity to come into the marketplace? We need some kind of a big move. Okay, I don't care personally if it goes higher for the euro and starts to go higher, it makes a run for these highs in here. I don't care. I don't care if it drops down to here. I just need it to move, because where we're at in here, I'm in a day trader's market. And again, that may not fit your cup of tea, or it may not be your cup of tea rather, but it is what it is. You can't change it. We have to adapt to what the market is providing us. So if we're going to be following two pairs, and they are euro dollar and GBP USD, it would be easy for you to say as a student, well, since this is really trading ugly like this, Michael, why don't you just pick a different pair? And with that, I would respond with, why? You need to learn how to work within these environments. If I just tell you how to trade when everything's perfect, it's going to give you a false sense of security. You're going to encounter this even in your favorite pair, regardless if it's not happening in yours now. It will eventually. So you need to understand how to work within these environments, because the market will absolutely go into these prolonged consolidations, and you need to be able to determine how that is determined by studying price action, and then what protocols you follow to work within that. So again, I'm not trying to teach you to be a quitter on these two pairs because it's trading in a large consolidation. I'm teaching you how to adapt to it. So we can't be swing traders in this market. It's impossible right now. We can't swing trade. We can't position trade because there's no underlying directional bias. We can day trade, and we absolutely can scalp. So again, that's the reason why it's important for you to learn all facets of trading, from scalping all the way up to long-term position trading, because by doing that and understanding all those styles of trading, you become a universal trader. It doesn't matter what the market's doing, you'll find a setup. And we saw an opportunity of that last week, where post non-farm payroll, again, we don't trade non-farm payroll. There's a lot of folks out there that are well known for being Forex related gurus or talking heads, and they write books and all that, and they literally will have their following sign up to a webinar or such and watch them trade the non-farm payroll. To me, that's just stupid, because central banks can use that smoke screen really to do whatever they want to do, and it's not trustworthy. It absolutely is not trustworthy. So what we do is we wait for that bomb to go off, okay, in terms of volatility. Sometimes it's a rather moot point, sometimes it's rather energetic. Last week we had FOMC, in my opinion, steal the thunder from non-farm payroll, and we had a very small little reaction. I don't like to trade ahead of non-farm payroll. I've done it in the past, you've seen recordings of it, but I don't like to do it. I'd rather see what side of the marketplace it attacks, and then I go and I trade. And that's what I did last week. So let's go in here. I'm going to break that down for you. That's really kind of like the heart of this recording today. And we had all of the discussion I gave by way of a free video on my YouTube channel. But I want to take a closer look to what you would see from the mentorship side. So when I look at my charts, this is what I have. Okay, I'm looking at the fact that this is most likely going to be the bulk of the volume of the day. We had a breaker up in here. Again, I mentioned that with this high, low, and higher high, clearing that. So if we trade up inside of here, that would be an area where I would expect to see some resistance. But we entered into a seek and destroy environment. And I mentioned how that could be problematic if you're trying to force a trade or if you're trying to participate in something. And honestly, in here, one could make an argument for both sides. Buying down here, selling short up here, and buying it down here, and then going short as I did here. The reason why I elected to go with selling short that late in the day, and it's a London close scenario, I felt that they took it up one more time to clear the stops that was formed earlier in the day. And because of the underlying directionless, if you will, price action, we were at an extreme late in the day on a Friday, post non-farm payroll, and we were up inside of this area of bearish liquidity. So we saw a lot of distribution in here. We came back up into it. They kept pressing into it, and I felt that these equal lows, as I mentioned in the free video, that this would be a very sweet target for them to run for liquidity. And holding over the weekend obviously isn't something I like to do, but for me to teach you how to use it and do it, this is what we're doing. I have to execute. I can't just say this is how it's done and then you take my word for it. I have to show you. So that's what was used for the example, carrying over the weekend, and then drawing out a long, really boring price action day. It just meandered around and finally just made a run for the liquidity in here. And you can see we didn't do much since then. We just consolidated. And again, just for completeness sake here, you can see all the time and price for all that. And I'll just one more time throw these up here on the chart. These are the tracers for the fills. And again, you can see pretty good grouping below the equal lows, or close proximity to it, and then very close to the high formed on Friday. So it's kind of like looking at the market with the expectation. This was really just a false little run up. They pumped it up and then expect some distribution. The other thing that I used to frame that idea on Friday was the fact that we had a potential market maker sell model, because we had this really clean, distinguished consolidation. Really, it looks exactly like a box. Okay, so what they did was they accumulated long positions. They let price release. They ran up into. They sold. They sold one more time, and then that second time selling, they entered a large scale of distribution. Price broke down, redistribution, another area redistribution today, and then running the equal lows. And that was basically the fractal I was working with. Now I mentioned that we did have some liquidity below here, and we have these equal lows in here I mentioned by way of the chart I shared on Twitter today. So those two areas right in here, these are still a point of interest for me. So I want to see if we get down there. That may be in fact what we see euro dollar trade to going into Tuesday and Wednesday, seeing this ran out. Once below here, I don't know if we'll see continuation, but that's certainly what we're going to be watching for this week. Moving on to cable. Cable, to me, I like the idea, if we get down to this candle's high or the open, 129.85, 129.80. If it trades down there, we could probably see a little bit of a buying opportunity, because I think this is still being controlled by the idea of Brexit. And what does that mean? I don't know. That's why I'm staying away from it. So if we look at the relative equal highs up here. I still think this area right up here, my eye just goes right to that every time I pull up a daily, and it just feels like they want to clear that. And it may happen this week. We may see a run down to this low here, and then something that would be hopefully hitting that same level during the monetary policy event for the economic calendar on Thursday. See that thing tear off into this. That would be awesome, because that would give me some kind of a framework to work within, because otherwise I think we're just going to just move around here sideways for a little bit. I think it has a bullish stance still. I don't see this as the high and we're breaking down and selling off. I just don't see it happening. They're not letting it. Every time it tries to fall through any kind of an important level, it just keeps catching a bid and they're sending it higher. So I don't want to stand in front of this and be a seller of cable unless it's a scalp or a day trade. Just be careful, because I think that they're going to send it here. And I don't really have any other outline for an entry that would key off of except for this one here. And it's just a simple order block, relative midpoint between the high and the low here. So that would probably give us a discount, I think. Looks like it from just eyeballing it. Let's see. Yep, because we're almost at equilibrium now. So if it drops down here, we have optimal trade entry, order blocks, opening price, thereabouts. So it could be around what did I say it was? 129.80. Yeah, 129.80. That would be because the opening price is 129.82. So rounding that down to the nearest institutional level would be 129.80, and that would give us around that optimal trade entry. So that would be about 62% retracement level, below 50. So it's in a discount, and then we could probably see some kind of energy by way of that report this Thursday. So I'm watching that. I'm studying that personally. I'm not in a hurry to do anything. You guys seen that on my Twitter. The way I'm engaging the people outside of the mentorship is I had everyone obviously vote to see what pair they would like to see me focus on this year. And the votes came in highest for Eurodollar, and they want to see 50 pips a week. So this week's done. I used Friday's entry over the weekend, and then here was the 50 pips. So I'm done. And I have no real interest in trying to do anything else this week, but I am watching the cable, and this is the framework I'm using down here. If we trade through it, it would have to find some support midpoint of this order block. Otherwise, then we would probably want to make a run down below these lows, but I just don't see that. I cannot see that in price action the way it is right now. I just think that they're just letting it drop down and then they're going to pick up some orders here and then send it higher. So when they come down here, if they send it higher, we still have to make an attempt to get through this high up here. And there's really no inefficiencies in here. I mean, if you look at the candles, I mean, we work both sides in here, both sides in here. There's no gaps. There's no inefficiency relative to the daily. It's just they have all this liquidity resting right up here, and I'm so convinced in my heart of hearts that this is where it's going. But do I want to get in and trade it yet? Not yet. But if it changes, I'll let you know. So that's going to be it for now. I will give you something by way of teaching on Wednesday. And again, if I have something that would outline a scenario for cable, hopefully it might still support this idea for Thursday's trading. I'll include that on Wednesday night. Until then, wish good luck and good trading.